You got to be yourself because everybody else is fool.
That's why it's crazy we chose the name Klippah Talk.
Then going to the barbershop, sitting around.
I want to say, I ain't that. It's a nice little reminder.
If it bleeds, it leads. 100%.
Like, hey, they want to say what they want to say, but we gonna let these Clippers talk.
I think that's it.
All right.
Welcome to another edition of Klippah Talk. Today, we're going to introduce to you a company that may not be well known in the community, but we want to get it out into the community. And I'm going to let each and every participant introduce the name of the company and also their role in the company. So today, we're going to learn a lot about what happens with your money, and not only what happens to your money, but what are you buying when you buy insurance. And I'd like to start off today with Mr. Darren. I'll let him introduce himself and give a little background about himself, and each and every other person that works there will also introduce themselves.
I appreciate you having me today. My name is Darren Rankin. I own an insurance agency called the Rankin Insurance Group. We've been in business since 2001. We offer auto, home, business, life, health insurance, and I'm here with my two coworkers.
All right. Now, we're going to introduce the next guest. I'm going to let her introduce herself. She's familiar with the camera, and I just want to see how she's smiling, how she bedazzled. Right. But I want to let her introduce herself next.
I'm Insured. I am a customer rights employee of Klippah. I'm a newly licensed agent, so this is a new journey for me. It's been very enjoyable. Oh man, I've learned so much. I remember being on the other side where I was purchasing policies and didn't understand what I was purchasing, or what I had rights to. So it's a beautiful journey and career to start, and I just love helping people.
All right, now I'm going to introduce Mr. Walker.
All right, Nathaniel Powell, originally from Pittsburgh, PA as well. After retiring out of the military, I dabbled into the financial field. I started working for a bank. I realized that I didn't want to be on the investment side, so I crossed over to the protection side, starting off with life and health, and then eventually gaining my property and casualty license. From there, once again, I've been with the Rankin Insurance Group ever since.
Okay, of course, you all know my partner, but I know it's something that you want to say pertaining to insurance. If there's any questions, anything that just give your perspective on what did you think about insurance before we get into learning a lot about policy and how it works.
I'm a believer that insurance is a scam. And I wish I could have met the man that came up with it so I can take him away from here before it came down. But nah, I'm just here to get the knowledge on insurance because I pay a lot of money over insurance.
You ain't the only one, pretty Tony. A lot of people think it's a scam.
It's a necessary evil, man. It is a necessary evil, I promise you.
Because my whole perspective of insurance was I always got it because I had to have it. And I didn't, until I got my own business, I really didn't start paying attention to what insurance entailed, like how it protected me and how I could also be liable. So I had to make sure, that there were certain safety precautions to take, procedures that we always covered, like something as simple as a kid running. You know what I'm saying? A kid running in here, we just let them run and whatever, they get hurt, we're liable.
Even if it ain't your fault.
Right. So these are the things that I started paying attention to when I was setting up the insurance for the shop. That's when I started researching about what was going on as far as like really what's being covered on my car, what's being covered on my home. And I started doing my research. But I'm still not as, well knowledge about it as I should be. So just gonna kick it off, and I'm gonna start off with the first question. Like, when did you start your agency?
I started the agency back in 2001. I'm originally from Pittsburgh, and I moved from Pittsburgh to Erie to work for Erie Insurance for about 5 years. They moved me to Syracuse. I was up there recruiting agents and training agents. Went back to my MBA from Syracuse, quit my job, moved to Charlotte, and started my agency from scratch. It was October 1st, 2001.
2001. and you've been surviving 24 years.
I guess staying power. Doing something right. There we go.
Yeah, so what made you want to get, I mean, I know you said a little bit about it before, but when you first got involved in insurance, was it more of a job? And then once you got into it, did it intrigue you to want to dig deep, or is it just a job?
So what's crazy is I've been working at Rankin Insurance since October of last year, 24. And originally, Darren didn't hire another insurance agent. So I came in strictly customer service and, just gaining the knowledge, seeing, and I wanted to get my license. I wanted to be able to do more, learn more. And so he gave me that opportunity. And he gave me that opportunity. And what y'all laughing at?
Burn going down. Burn's going down.
It's funny because prior to this, I was selling cars.
Mm-hmm.
So I'm like on the other side of that. That's dead. You got to be a crook to sell cars. Selling the cars and insuring the cars is two completely different things.
Right.
But I've always kind of wanted to venture into insurance, any career helping and assisting, but I never had anyone to give me the opportunity to get in an agency without obtaining my license.
Right.
So with me going in just as strictly customer service, I was able to kind of work behind the scenes. Like I couldn't discuss coverages with people, but I could quote and learn on the back end. So once I got my insight, I was like, okay, I think I like this. I want to go further, and he allowed it. He actually taught me too. He teaches as well. He didn't mention that, but
yeah, I kind of picked up on it. He's a man of many
So I mean,
coats.
who better to learn from? Even going through class with some of my colleagues in there, it's funny because a lot of them are getting their license and they're just being not tossed, but tossed out there to just figure it out. And I'm working with my teacher, like my confidence is a lot higher because I can go to him like, okay, am I doing this right? Where a lot of other people are kind of just working off what they learned.
Right, freestyle.
Yeah, so they're
Direct
more of
mentorship.
of like a liability for their job. I mean, I'm still a liability to
Everybody liability.
Right, we all. And so, Nate, I know I said walk earlier because you reminded me of a friend I got walking and I got caught up. But I know you mentioned in the beginning, like what you did before and what brought you into it. But now that you're into insurance, what about it makes you want to gravitate and gives you the passion to keep doing it?
It's the fact that it's the protection side of financial products.
Mm-hmm.
I like that side because I can let you know this is what you need. These are the type of coverages that you need to keep yourself going in case of an accident or either a tragedy that happened or either even just down to a mishap that maybe one of your employees may have caused for your business. Mm-hmm. I can let you know where you stand, what you need on the policy, and how to protect you that way. And I actually like that. Like I said, I was prior service military, so protecting is part of my nature now.
Right. And so, and when you're saying protecting, you're saying that insurance can be a shield or a buffer from the realities that can bankrupt you or the realities that can set you back in life if you use it the right way.
You say it as realities, we say it as risk.
Right.
In that industry. It's the risk that we all incur.
Right.
You have a shop that relies on electricity, and you have somebody that comes into the shop, and for some reason that outlet was just bad that one day, and shot messed up. Whatever the case may be.
Right.
Well, you don't want to be personally liable for that hospital bill.
Right.
Trust me, you don't want to be personally liable for that hospital bill. So you have these policies in place that take care of you.
Right. So it keep me, I can still maintain and take care of my family.
Right.
Right. So these are the things that I looked at it as a burden. Like, man, I'm paying money for what? But, the explanation that you guys are giving and going to continue to get is the insight that I feel people out there need.
We know a lot of people pay their premium for years and they never have a claim, which is good, right? You don't necessarily want to experience tragedy. So some people look at it as a scam, right? But we do put lives back
Right.
together.
Right.
So a person's business burns down, we rebuild. Someone's house burns down, we rebuild. Someone
Right.
wrecks their car, we repair it, right? Or we
Right.
replace it. So we put lives back together. We get to see it all day long, but normal people on the consumer side don't necessarily have that experience with insurance sometimes.
Right.
And I'll even also say the risk that a business or individual holds, the amount of risk they have compared to what they're paying in premium is nothing. I feel like insurance is fairly cheap for what it would pay out.
Right. Right.
Because I mean, you got people who buy policies that are worth millions and barely paying $1,500 a month. So I think it's like what Darren said. You got people who go years and years, never had a claim, so they look at it like a scam until that tragedy happens.
I tell people like this: look at it as your financial bouncer. So, in other words, if you owned a bar, restaurant, you had security at the door. Well, if nothing happened that night, you still got to pay that bouncer.
Right. Right.
You still got to pay that security guard for making sure that, or being there just in case if something did happen.
It's like that analogy.
You Debo. and we all agree. Now I'm gonna ask this question: like, well, who you basically you have your own company, but who are you selling for?
Yeah, so we're an independent agent. So there's very few minority owned independent agents. Most minority agents would be captive. So there's very few minority owned independents. But we represent Erie Insurance, Progressive, National General, Auto Owners, The Hartford, Universal Property Casualty, Universal North America. We sell some life insurance for Ethos. So we have multiple companies that we prepare policies for and proposals for our clients.
Now, I want to ask a question. If I would come to you and would it be based on my personal need, which company I would actually you would write me the policy for, or is it that's how you cater it, or is it just those individuals that you bundle together that you use?
So insurance today is the rating and the evaluation for an insurance policy. It's very it's pretty scientific, right? All the insurance companies have different algorithms, how they rate the policy, how they calculate what your premium is going to be. So it's about eligibility, whether you qualify, whether the insurance company looks at you as a potential a good risk, right? If you fit their appetite. So that's part of the equation of where you end up. But the other part is who's the most competitive for you, right? So coverage, pricing, but you have to qualify. You do have to qualify with different carriers. Gotcha. So they all have an appetite.
Gotcha. Because that's something that a lot of people, I know people who shop for insurance and they're just looking for the cheapest price. And I used to be that way until I started paying attention to, okay, when I signed with this one, this is how much money I have to pay in case an accident happens. And I learned that I could actually cater to where I pay a lower fee when it's time. I can't remember the name of the fee, but the fee that you pay.
Deductible?
Yeah, the deductible. My deductible, I'm noticing that if I pay the lower deductible, which my insurance may cost more, but I receive more coverage. So a lot of people online, they're just shopping for the cheapest. Like if I get $99 a month for 4 vehicles, they're going to jump on that. If I were to do that, what more than likely will I encounter if I'm just jumping online for the cheapest price?
Well, from what I've experienced and learned, whenever you're quoting yourself online, that whatever system you're using, they're not pulling your MVR, your motor vehicle record. Mm-hmm. So all of that, they utilize your MVR and also your claims history, basically, to help put together a premium, and I guess kind of judge what type of risk you are, or how high of a risk. And like he said, different companies have different appetites. I know it may sound crazy. Car insurance, for example, growing up, I always thought National General was just one of the main companies. And as I began to work with Rankin Insurance, my eyes opened up to all these other insurance companies. Like, wow.
The rate online is a teaser rate, though, right?
So yeah, that's a good word.
Yeah, it's a tease. It's not going to be your actual price. But if you're purchasing insurance and your mindset is, I want the cheapest price, your coverage may not be great. You're not going to be financially protected in the event that you are at fault in a vehicle accident. If something were to happen to your belongings, you may not have enough coverage, but you just opted for the lowest price. And so that's not necessarily a good mentality to have. Our approach is more about value, what we bring to the table, what we can communicate in terms of coverage. So that's mainly our focus, is to educate our clients. Right. Okay.
And with that, as agents, we're like the first level of underwriting that you go through. All right. And sometimes when people shop online, when they're inputting that information into the system, they don't know everything that they're able to get. They don't know whether they're able to lower this coverage or raise this coverage. And that may be deductibles, or that may be just coverage period, certain endorsements that they want on the policy. So a lot of times, like with one carrier that we have, a person will come saying, yeah, I got this quote from so-and-so carrier. And I'll go right back in with that same carrier afterwards because I know what you can do. You can lower, either raise this or adjust something on the policy, and then that policy comes out cheaper for that customer. And that's our job as independent agents. We're supposed to shop for you to gain that best price for you.
Okay, well, this is stuff people don't know, you know. But for the next question, I want to ask, like, what products do you guys offer?
Oh well, life, health, business, and home and auto, pretty much. So pretty much your personal lines. There isn't with the licenses that we hold, there isn't really a type of insurance that we can't write. But within the office, I would say our main focus is personal lines, home and auto, and life and business.
Also do some disability insurance, long-term care, annuities. Some people want to put some money aside down the road. We have various fixed annuities. So we got a nice portfolio of products that we offer to folks. Okay.
One of the things that I look at, I would say, like, is it cheaper to bundle? Like, say for example,
Good question.
is it cheaper to bundle these products, or is it better to just individualize as you do your portfolio?
Leads on it.
All right, so it depends on that person's situation. All right, I can't say that it's going to be the same for the person that has 0 accidents, 0 tickets on their motor vehicle report. That's going to be the same for somebody that doesn't have those things on their motor vehicle report. And it depends on what the company's offering that particular person at that time. For that particular person, it may be cheaper for them to do what's called a debundle. It's just you go with one carrier for this, but another carrier for that. So you go with Progressive for auto, but you go with Nationwide for your home. And it may turn out to be a cheaper route, depending on the type of history that you have.
Okay. Now, as a homeowner, I've never really filed anything as toward my insurance, except for I'm real big on, I don't look at my home as a place to live. I look at it as an investment. And so I had an encounter with my insurance company when I moved in. I didn't have the correct, I was getting 2 different ages for my roof. So to protect myself and to make sure that I knew from the day I moved in that this roof was going to be sufficient to sustain my home, I called them and I let them know, like, I've been with you guys for X amount of years and I've never had a claim. So I would like to get my roof replaced. And it was in the beginning, because I guess the agent I was dealing with he was more or less thinking company and not investing. So I began to stress to him, like, if I can't have a company that's going to help me protect my investment, then I need to find a company that will versus. And so, back and forth negotiating with him. He eventually, I got my roof put on and they covered it, but he did stress to me that my insurance policy may go up. And, I'm like, why would it go up? And I've never filed a claim.
It's a lot, Peter.
Yeah, that's a myth, right? The fact that you never filed a claim, your insurance should go down, or it should not go up if you were to have a claim. Remember, insurance pricing today is very sophisticated.
Mm-hmm.
So claims activity will push you into a higher tier in terms of pricing, meaning a rate increase. Like the other part on the roof, right? As a homeowner, and I'm not saying you directly, as a homeowner, when someone buys a house, when someone buys a commercial building, there are certain things that come with being an owner. And part of that is maintenance.
Right.
And so homeowner increases right now, one of the reasons they're going up is because more and more people feel they don't have to put a new roof on as it ages out.
Right.
They're waiting for a storm to hit and they want to file an insurance claim, and it's creating stress on the system. And so people learn when they start filing roof claims, hey, we don't cover old roofs. We never have. Wear and tear is not covered. People think they're going to get an entire roof replaced. You may get one slope of the roof replaced because that's the only side that's damaged. You may get the entire roof replaced. You may get none of it replaced. Right. So you never know how that claim's going to pan out. But it is just a normal responsibility of being a property owner. Replace your HVAC, replace the roof, replace the furnace, water heater, all those types of things as they age out as a homeowner. People look at insurance too much for those things, and we don't cover just breakdown and wear and tear most policies.
Gotcha. So at that point, I was using the myth instead of the facts.
Yes.
Right. Gotcha. I guess it was fortunate.
You're fortunate
things.
Yeah, for you to call them and tell them you ain't had a claim in 18 years and you want your roof fixed.
Yeah, because I explained it to him like, I'm trusting you to ensure my investment. It's not a home for me. And my wife, she's frustrated sometimes. I'll live somewhere, I'm like, look, man, the value's going up. It's time to go. You know what I'm saying? Let's get this money and move on to the next. So,
well, the other thing, you calling and having a conversation with your agent. You need to have a good agent, number one, because you don't want to just file a claim. We don't just come out, believe me, the insurance company. We don't just come out, right? In order for someone from the insurance company to come out, you have to file a claim. So as a homeowner, you want to make sure the chances of that claim being covered are pretty high before you litter your claims history with an unnecessary claim, because that can get you canceled. Right. And that can push you from the standard market or preferred market into the excess market. You don't want to be there because that's where you don't get as great coverage. Your pricing is not so good, but you don't just want to pick up the phone on consumers and just call the insurance company. You want to get a contractor come out there, tell you what's causing the damage, and get an estimate to see if it's above your deductible before you reach out to the insurance company. But if you have a good agent, you can have that conversation with him or her before you get to the insurance company. They can protect you or shield you.
Right.
And it's a learning lesson for either new home buyers or investors. For people that are going out there and they're looking at older homes to buy, you might want to consider how old that roof is on that house before you buy it, or before you decide to invest in it, because it'll be difficult or either very expensive for you to find coverage on that property. So that's just something to consider. So if you go out there and you say, oh man, this home in Sumter, South Carolina is only $40,000,
right,
but that roof is 30 years old. All right.
The insurance gonna be more than hell.
That's a knockout question. So you find a house with a roof over 15, over 20 years old, it may be an automatic decline as a new applicant to any insurance company. They all get their guidelines, and those are some knockout questions. The age of the roof.
That's crazy. But
Tony, you feeling the way over there?
Yeah, I'm good, man.
Tony feeling good about his premiums right now.
You know you're going to be taken care of when he calls.
Now I don't feel so bad paying what I paid.
Sitting here, I hate to ask the question, but I'm gonna dive right into it. Like, what is insurance and how does it work? What is to the person that doesn't have any understanding, they just have the basic knowledge of I gotta get it because the law states or my mortgage states. What is insurance and how does it work?
So I get the technical answer. They can think about a softer one, right? So insurance itself, it's a aleatory contract. And Cherie kind of alluded to it earlier, right? So an aleatory contract is where you have a contract where the values are unequal. So you pay $1,000 a year for homeowners insurance. That $1,000 that you pay in does not equal to what the insurance company may actually pay if your home is destroyed. So that $1,000 you put into the bucket, the insurance company, let's just say your home is a $100,000 home, keep the number simple. The insurance company is on the hook to pay out $100,000 if your home is destroyed. If your home is destroyed, they're also on the hook to pay another 10% for any other structures like a detached shed, garage. They're on the hook for another $10,000. So that $1,000 you put in, they're on the hook already for $110,000. On top of that, they're on the hook for 70% of the dwelling amount to pay your personal property, clothes, furniture, electronics, housewares. So now we're at $180,000 that the insurance company is on the hook for. And the last number is loss of use. You can't live in your house because it's uninhabitable. They're on the hook for 20% of your dwelling amount, which will be $20,000. So we're at $200,000 that the insurance company is on the hook for your $1,000 of premium. That's a pretty lopsided agreement, right? And so it only works if everyone does not have a claim. Everyone can't keep taking money out when you see that much of an unevenness in terms of an agreement. So, it's good to not ever have a claim or not to experience a claim that often. It keeps the system functioning, but it does create, I guess, a bad attitude for some people saying, I've been paying for 10 years, I've never had a claim. Well, good, but your neighbor down the street, their house burned down. Right. And that's where some of your money went. And that's how they were able to rebuild, right? But it's easier said than done. But that's how insurance works. You spend a little bit of money, goes into a big pot. We hope most people don't have a claim, and it is able to sustain itself by only a small percentage of people filing claims over time.
So it sounds almost like people taking care of each other, and it's just one person. I mean, it's a group making sure that we all take care of each other in the sense. So I love it. Right.
It was my turn.
Yeah.
What's it? No, I was just kidding.
Now with that, I'm gonna ask as part a product that we haven't mentioned, but what would it like mortgage insurance when it came to say a spouse passed, or how could you entail into your insurance policy in the event that one of the spouses may pass? That is there any coverage that may pay the home off or cover the home or take care, like a buffer zone for the built into the mortgage?
So we're gonna skip Cherie because she don't have her life license.
Right.
So it's going to be in go first and you second.
I'll go second on this.
Go second. So mortgage insurance, it's just a term. It's a marketing term, right? It's just life insurance. And so, we hope people buy life insurance. We promote it all the time. But that's the product you need to have in the event that one or two of you pass away, to have money to either pay off the house. Some people don't want to stay there though, after their spouse passed away, right? They may want to move on and start a new life, start a new chapter. But it also provides some money so they can move on. They may want to put the house up for sale if they're underwater in terms of value. If their spouse died in the house, right? Might be the haunted house now, right? So they don't want to live there. But that's how people continue to move forward, maintain that standard of living, is by purchasing life insurance. And not enough of us, people of color, take it seriously.
Mm-hmm.
It's kind of similar to like key man insurance for business. Have you ever heard of that one before?
I have.
Okay, so when you're the key person to your business, I would kind of equate it to like a Elon Musk, right? If he dies, right, well, there's a lot of investor confidence within him as a person, period. So if he dies 9 times out of 10, that company's going to take a lot of damages.
Right.
It may not fold, but the stock may go down a lot. All right. Well, that insurance on him allows for that company to help rebuild themselves. So, yes, with life insurance, it is definitely one of those things that you just want to have as a financial instrument for protection overall.
Husband and wife, you got a dual income household. They're both key persons, right? It takes both salaries to survive, to pay the mortgage, to make ends meet. So, you get 2 key people that you need to make sure you have life insurance on.
True.
And another one that ties a concern that I have is I'm hearing different things about flood insurance. So, like when it comes to flood insurance, now, from my understanding, when you get a mortgage, when you get insurance for your home, and if pipes burst, that's cool. The water heater burst, that's cool. But anything that's storm related or a natural disaster, that's an additional coverage that you need to get versus what's built into your mortgage. Built into your insurance.
Yeah. So words matter, right?
Right.
I teach insurance. Sheree told you. So words matter. So your pipe bursts and then the house is flooded.
Right.
That's just a pipe break, right?
Right.
In the insurance world. But water from the outside, natural disaster, that's where flood insurance comes into play. So you're dealing with outside water coming into the home. It's never covered by a normal homeowner policy. It's always been a separate policy. So, looking at Hurricane Helene, a lot of people in the mountains, they never thought they'd have the exposure or the chance of being flooded. But under the flood policy, we also cover mudslide, mud flow. It's covered in the definition of the flood policy. And so it's an important product to have. And with new construction taking place more and more, areas that were undeveloped, raw land, grassy land, rain, clay, and dirt, when it would rain hard, those areas didn't really flood. The earth would just absorb the water. As we keep building more and more homes, roads, we have concrete, we got asphalt, and when we have heavy rains, there's nowhere for the water to go. So it's just traveling around. And so areas that never flooded in the past are now flooding today. So you may have purchased a home 10 years ago, you were not in the flood zone, you may be in the flood zone today because of the construction. Or you come out your house, you never saw water puddling in the yard, it's beginning to puddle in the yard. When you have heavy rains, you might want to think about going some flood insurance. Things are changing, the topography has changed.
So, go ahead. So, if that water that gathers in my yard, that would be considered natural disaster, if that water would have come under my door.
So that would, if it comes into the house, that would be considered flood under a flood policy. Your normal homeowner policy wouldn't cover it as a pipe break or water backup. Right. You would need specific flood insurance for that to get you covered.
That's crazy because like the average person, they would be under the assumption that water would be covered.
Got this blood.
Right, because they I guess they don't fathom that is a natural disaster, and it's not a hurricane or anything. It's just the accumulation of rain in the ground not absorbing it, coming into your home, and now you're responsible for that versus the insurance.
Thousands of dollars.
Right.
I was gonna piggyback on water backup. I never learned about that until I started working in the agency. And having a toddler, they might throw a toy in the toilet, get it clogged up, and traditionally as homeowners, you are responsible for that. But there's an endorsement that a lot of people don't know about, where you can have that coverage on your homeowner's policy.
Sorry, well,
You did.
All right.
Hey, she about to make me want to do insurance.
But to be an agent myself, I don't know the thing. No. So and like Darren said, verbiage, vocabulary is important because somebody just say my house flooded. Okay, now we have to figure out where this water came from. And once you figure out where it came from, if they have the coverage, because if your dishwasher overflowed, destroyed the kitchen, and you just got to remodel, if you don't have water backup, you gonna pay again to get it
That's
remodeled.
also built into a policy. It doesn't just come with the policy, it's built into it.
Correct.
No. It's an endorsement to the policy.
Yeah.
Like you got the policy, slap another piece of paper on the back of it.
So
Right,
it's a
saying
add-on.
you got that coverage. This coverage for that. So it's an add-on to.
I think that's what he meant. He just said.
Yeah, I just.
But everybody got to add on. You got to have,
Yeah, you gotta think
looking
that
out for you,
Right.
right? To put it there, and then maybe you'll push back, but you go, no, you need that, right? You need somebody selling you coverage, like they would sell their mother, right? Take care of your that bitch.
So, just to piggyback off what we're saying, I'm gonna ask this question, like, so it's better, and my wife can attest to it. The biggest thing with me is I hate doing anything online because online you get generic, general questions that I answer. But when you actually deal with a live person, you can get to the bottom of things and you can get as much knowledge as you can. Versus, so my next question I would like to ask is like, would you prefer a live agent? Because me myself, I prefer a live agent versus online or 1-800. Give me the difference in what would I get as a blank-minded consumer if I was just looking for what would I get more information from a live agent or
I mean, absolutely. You're able to ask the questions that you need to ask. And again, it depends on where you're shopping. And working at Rankin, I've seen the beauty in working for an agency. I've never worked for just an individual insurance company, but you're limited when it's just one company. If I know your record or your claims history, and I can't do anything for you, I can't do anything. The company won't approve you. But if you work with multiple different carriers, you're able to, and Nate talked about it too, shop that person around. And you learn how different companies handle certain claims and situations too. One thing we do tell people though, we don't work in claims.
Right.
We write the insurance policy. So we get our information from seeing past customers go through their tragedies and issues. That's how we gain the knowledge. But we don't make the ultimate decision. Hurricane Hugo came and, we're just going to replace your roof, So, and I think that's one of the most challenging parts because people want your opinion. Well, I can't tell you if it'll be improved. I can tell you if it may be a higher chance or a lower chance, but I can't say, yes, this is the proof. We're going to fix this.
Right. And I've been one of those people on the other end. And when a person told me they can't do it, I'm like, what do I need you for? Not knowing, but now I understand it's like, it's not, everybody has a job. And your job is not to tell me yes or no what you can't do. It's just, this is the information I can pass on to you. There's another department or there's another person that handles. Okay, so that gives me a better understanding.
You got something to add, Lee?
No.
I'll tack on to that. So, whether you want to buy online or 800 number, I say you want a local agent, right? You want someone you can build a relationship with. You want someone that you can talk to over and over again. If you have a question, right, building that relationship is important. Everything's not covered. Everything's not able to be covered, right? And as people, we have to deliver that news to our policyholder. Everything can't be covered, period, right? If everything was covered, you would never be able to afford an insurance policy. That's
Right.
how it ends up, right?
Right.
And so, we deliver the hard news to people, but we do it in a soft way, but we're straight shooters. We don't know how some claims will pan out, but I know how a good majority of claims are going to pay out, right? So if you have 10 trees in your backyard and they just fall in the yard, I can tell you with certainty, it's not covered. There's no point in filing a claim, wasting your time, wasting that energy, wasting people's time at the insurance companies when I know it's not covered. Tree falls and hit your house, that's covered, right? That's it, it covers structure. So there are certain things that I tell people with certainty that it's not going to be covered. But one of the favorite phrases in insurance is going to be, it depends. Every claim, it depends on the actual circumstances, surrounding that claim. And one thing can change the entire outcome of how that claim is going to be handled. But some things, it's clear as day. You don't have flood insurance, your house is flooded, it's not covered. Trees fall in the yard, never hit the house, not covered. Right? Certain things we know for sure.
Fine.
I do got one for that. For me, it's kind of, you ever been in a situation or dealing with an industry to where you don't know whether you're asking the right question or not?
All the time.
That happens a lot in insurance. So let's say we just had like the college draft and everything like that, right? And this is the first time this kid is going to see an NFL deal, all these different type of sponsorships and endorsements or whatever. They may not know the right question to ask at the right moment, or either the way to structure something. So what do? They go out and get a sports agent.
Right.
That's us for insurance.
Right.
Where okay, you may not know how to frame the question the right way, but through a conversation, through discovery, we can get you what you need.
Right.
It's amazing how many business owners aren't able to articulate what type of coverages they need. I never realized there was so many different types of like business policies. But yeah, it's a lot of business owners that lack the knowledge and what they need to be covered for, and that's everyday driving on the road. You might not have a commercial vehicle, but if you're driving for your business, at that time it's commercial. So there's extended business coverage and liabilities that you can add on to your policy that's going to cover you while you're using your personal vehicle for business.
I didn't know that.
So let me ask you this. In a shop conversation a couple weeks ago, there was a guy here, he said, think about every 6 months he changed the insurance companies just for pricing. Now, is that one of those things that after so long, you're going to run back to the same company? Like, is that?
Well, in the industry, we call them insurance whores.
Yeah.
But they just run around for the best price, right? Every 6 months. What it does is it backfires on them to some degree. Sticking with an insurance company for a period of time, you do begin to build preferred pricing. That is baked into the rating mechanism, so you can see discounts that a new person would not see. And so, if you were to have an incident with an insurance company you've been with them for a while, they may be more likely to continue doing business with you after that claim compared to another insurance company you've had a very short history with. So it is better to not keep shopping every 6 months. It's exhausting, but you actually do yourself a disservice on it.
Okay.
I'm looking at, you see fires just popping up, like New Jersey, fires just popped up. You saw fires in LA. You're seeing natural disasters, tornadoes, hurricanes. And I'm watching the news and I see policies canceled. And I see certain things that like the Tesla incidents that are now popping up, how they're catching on fire in garages. How does natural disasters affect the model of insurance?
So natural disasters, nobody's prepared for them. So they are catastrophic, even to the industry. You look at Hurricane Katrina. Katrina was the largest natural disaster in U.S. history. $200 billion was the price tag on Katrina. You look at 9/11, it was $40 billion. The California wildfires right now, they may surpass Katrina. When you look at the number of structures, the loss of income, the number of people displaced in terms of working. So those numbers are unexpected to the industry. It does cause a shock. Every insurance company that is paying a claim is not necessarily on the hook for that entire amount. Insurance companies insure one another. It's called reinsurance. And as you begin to go up the layers of insurance, go into reinsurance, you begin to lose capacity. As the top companies lose business and they're losing money, they're going to pull out. And then the lower insurance companies don't have anywhere to buy reinsurance from. So it has a ripple effect downward. You have some catastrophes, but it's a strain on the system. And so insurance, in the beginning, right, you get this obligatory agreement. $1,000 a year, and you get the potential to have a $200,000 payout. When you have these natural disasters, they're not sustainable. I mean, are the insurance companies able to absorb it? Yes, for the most part, but there is going to be a rate increase. There is going to be a repositioning, some remarketing. There's going to be some price adjustments that will be made depending on how large that catastrophe is. Helene is going to be a big one. Helene, there's an estimate, I think right now it's like between 10 and 17 billion, but you read some articles, they say North Carolina's going to be 60, but all that is not insured losses because a lot of people didn't have flood insurance. And so, the total disaster is humongous, but it is putting strain on the system. It is. Last year, I think 2024, I think there was 236 catastrophes throughout the globe. And so, again, on the reinsurance standpoint, insurance companies reinsuring other insurance companies, it is putting strain. People don't believe in climate change. The numbers speak for itself.
It's crazy because I know we have conversations and a lot like, there's a fact or myth, the Tesla incidents. If you have a charger inside of your garage and the car overheats and it catches fire, would that be covered? Would that fall under? What if it did? What would that fall under as far as insurance?
So you have two claims. You have one for your vehicle, if you have comprehensive coverage. So you buy car insurance, you got comp and collision, you have liability. Fire would be a comp claim. So you'd have a auto insurance claim for the burned up vehicle, and then you'd have homeowner claim for damage to the home. So you'd have two claims simultaneously. It would be covered, absolutely. The question would be whether the insurance company goes back to the manufacturer of the plug-in device, and whether they try to capture their money from that maker if it was faulty. They call it subrogation. So there may be a possibility where they can go back to the car charging manufacturer or go back to Tesla or the battery maker, whatever the cause of the fire was. But two claims. We see it all the time at Christmas time. Every year we get into the fourth quarter, phones bound to ring. People say someone broke into their vehicle, stole their Christmas gifts, right? And it's like, well, you're going to have two claims. You got a renter's insurance or homeowner claims for your personal items that were stolen out of the vehicle, and then you got an auto claim for the broken glass, the damage to the vehicle, and it is what it is.
And I would say before you start to add certain things to your house, it's okay to call us. It's really okay to call us because we'll help you out. Sort of like for a person that's getting a backup generator on their house. And let's say for some reason it was faulty, but it ended up causing damage to the house. But you didn't call us to let us know that that was going to be a part of the house now. You may run that risk of it not being covered. So we can tell you whether you are covered for it or not. Sort of like you ever seen the new tankless water heaters or heard about those now?
Yes,
Okay, well, that's a change from what you initially started out with that builder. So if you give us a call, we can say, hey, this could potentially be covered or not.
Right.
So it all starts with a conversation. Just a conversation.
So that's another advantage of a live agent, an agency versus dealing with the 1-800 numbers and that.
Exactly.
Dealing with the 1-800 numbers, you never get the same person.
Right.
Over, right? You get operator 212 today. Next time you get operator 16. So you never really get to build that rapport or that relationship with that person. And you don't even know if they're licensed.
Right.
They may just be in customer service and they can't answer questions that an agent can answer for you.
Right.
So it is better to deal with a local agent.
So piggybacking off of that, what would you say sets your company apart, your agency apart from other agencies?
People,
And these are people.
I'm the charmer in the office.
People. I'm an insurance nerd, right?
Right.
So I've been in the business for a while. We take continuing education seriously, practicing our craft, staying up to date with coverages, up to date with guidelines is very important to us. We don't just sell people the lowest price product. We are trying to educate them. Most people don't even know what their auto policy covers, really. right? And you're talking 30, 40, 50-year-old people. So we're sitting there on the phone telling them what bodily injury is. This is why you need to have something better than state minimum limits. You have an accident, it's not going to be able to repair the other person's vehicle. Like, those are the conversations we're having with people on a day-to-day basis. So people, that's our greatest asset, our passion for insurance, that we educate our clients. I think that's one big thing that sets us apart.
And it's crazy, right? Because I think you would enjoy this. We were talking about endorsements earlier. I'm gonna trip you up. Do you know what the definition of personal injury is?
I have assumptions what it is, but I don't know the insurance terminology.
Well, growing up, I always thought personal injury and bodily injury were the same thing. Like, oh, I personally got injured, but you know, it covers for insults, defamation of character. So you can purchase an endorsement, put it on your homeowner's policy, because I mean everybody's always liable. So let's hypothetically say you said something to insult someone, and they went home on the podcast, and they went home and slit their wrist, and now the wife wants to sue you for personal injury because you said something so offensive they went to harm themselves. Well, your homeowner policy will kick in for the amount of coverage that you are covered, and help you with your legal fees, getting a lawyer, whatever they sue you for, up to your coverage. So that's where it comes into play. And y'all can jump in there. You know, I'm still newly licensed, but
Sure, Ricky, feeling good about it.
I just,
Education.
It's almost like I know it.
that was
I remember that definition out of head.
yeah, like because again, Klippah Talk. What are y'all in here doing? You're talking.
Right.
You can just be in the barbershop talking and say something offensive and not realize that you're talking about somebody, and this, yeah, and this.
Yeah, so personal
Situation
injury is not necessarily covered under the homeowner policy. Most policy is an add-on. So libel and slander will not be covered under a normal policy. You need personal injury. And so that's where she's kind of like, I didn't realize, it was a special thing. You had to add on to it. Yeah, you got to add on to it. Imagine how many kids you got with your clients. They're on Twitter, they're on Facebook, and they've insulted somebody online, the whole world to see it. That's going to be a personal injury claim. Everybody with them Twitter fingers. That's going to be personal injury. So it's going to be libel or slander, depending on how they put that out there. And if you don't have the coverage under your homeowner policy, it's going to be a tough check to write.
What was K. Michelle? What was it? Is that her name? The one that got sued by Cardi B, right? And for slander. Y'all remember that lawsuit? Okay, well, it happened. It happened, but that's what happened. She was online, I guess, either on her podcast or on her whatever level of social media that she had, and she was saying false things about it. Well, Cardi B turned around and sued her. All right, now she had the right protections under her homeowner's insurance policy that could have kicked in for her. That personal injury could have kicked in for her and helped her with that lawsuit.
It's crazy. So I'm hearing the different variables and models, and could that be a reason why car insurance is going up? Like, what are the reasons they're going up?
That's on the property side, right? So that's on the homeowner side. But auto, it's because people can't drive. People can't drive.
They say North Carolinians.
When you get in your vehicle, right, you crank it up, push to start, whatever you do. I know you floss, so you got to push to start, right? But you got a duty behind the wheel. People don't look at it that way. You have a duty to operate your vehicle in a safe manner to protect other people on the road. We don't care about you.
Right.
We care about everybody else on the road to protect them. And people don't take it seriously. People are on their phone, they're texting, they're social media, they're recording themselves, they're speeding, and vehicle accidents, they're through the roof right now in terms of frequency. But there's still a shortage on parts. If you get into a car accident right now, you're lucky to get into a body shop within 3 weeks. It may easily be 5, 6, 7 weeks. And so the longer it takes for your vehicle to go into a shop, the more likely the insurance company is to total your vehicle. So they wouldn't have totaled it in the past, but the fact is it's going to take so long to get your vehicle repaired, they're totaling more vehicles out than they ever had before, and that is raising rates. People don't want to work in the body shop, so they got labor shortages. There were parts on boats for a long time, cargo ships. When there was some beef going on, now we got this whole tariff situation. But the cost of repairs, cost of parts, they continue to skyrocket. But a big part is people just don't take the responsibility of driving seriously. You're operating a deadly weapon.
Right.
There's accidents all the time for no reason. How's your driving record, Tony?
My driving record, he reckless.
Oh man.
That might be personal injury, Tony. You might have a claim.
Yeah, thank you. Nah, our driving record ain't bad at all. No points. They all off.
Points on your license or points on your insurance? Because a lot of people don't know that too. You have license points and you have insurance points. So depending on the tier of the wreck, how much money had to be paid out to determine.
About 7 years since I had the ticket.
I told you. Welcome to the club, buddy.
Yeah. So
No claim?
now before that, I got a couple of like,
Well, I just asked you.
oh, well,
I said insurance points or license points.
He said it wasn't his fault.
See, that's what we deal with every day.
That's
So
right.
we on the phone and we ask people, we say, have you had any tickets or accidents in the past, 3 years or 5 years? And they say no. We hit the button, right? We order your reports. And all of a sudden, it's like a rap sheet. Right? It's like the Maury show. You know what I mean? When it comes to Ray, you are the boss. Somebody runs off down that's Cherie running down the hallway. She's screaming because somebody done misled her on the phone. We deal with it all day.
That people, yeah, we're gonna find out.
We're gonna find out.
Okay,
Just tell
we're
us
gonna
the
find out. All right, you're gonna give us your license because we can't do nothing without it.
Right.
Give us your birthday because we can't do nothing without it. And once those two numbers come into play with your name attached to it, there's a report. It's that simple. It's going to happen.
Right.
Just tell us what it is, so because one, you're saving us time because we'll know who not to put you with.
Right.
All right. There's some insurance carriers that are a little bit more bougie than other ones, or a little bit more picky. So if you just flat out say, "Hey, listen, man, I got into 2 wrecks within 2 years. One wasn't my fault. The other one wasn't." Just tell us what it is. Okay, cool. We know not to put you with them. We're gonna put you with them. And that way we can work it out with you. But when we're sitting there and we're doing our end of the bargain and we finally get that report back, well, we didn't just waste 20, 30 minutes out of our day with somebody that you could have told us. We knew that wasn't the right situation for you.
Right.
So it's just like we're gonna find out, whether it be house claims, whether it be automotive claims or medical claims. Okay, we're gonna find out.
Yeah, just be transparent.
And even if it wasn't you, if it happened in your vehicle, we're gonna find out.
Right. So, okay, that's
Or to somebody on your policy.
right. Okay. So that makes sense. And then, like you're saying, sometimes the person may not think it's them, but the vehicle, the coverage, it happened under that coverage. So just take that into mind. That if anything that you're using as coverage, anything happens under your watch, you're responsible for it. Be it if you let somebody borrow your car and it happens. It's not them per se, it's your coverage.
Mm-hmm.
That's
You waiting on me to say?
I'm waiting on you.
The insurance follows the car, not the person.
right.
so let me ask you this. When you got kids, because I seen it, I'm guilty of it myself, right? They get their license, you go get their insurance, so they can get their license, then you drop it. After
Try
they
to.
get their license.
You try to do that.
Try to do
You're
that.
successful with some agents.
You know what
Now
I'm
we're ranking.
Yeah.
We want our money.
Yeah, so how was that? I'm trying to get my question together, but
Well, we're working on it, right, from a legislative standpoint, right? Because you know I do everything. From a legislative standpoint, we're trying to crack down on people who just take a piece of paper to DMV and allow that license or that insurance to lapse. We're working with DMV and the state to kind of clamp down on those vendors because it's costing the insurance industry money. It's basically shrink, right? It's a waste in the system and it's inflating claims because we're not getting premium for the exposure. We're not getting enough money for young kids behind the wheel. So we're trying to actually clamp down on it from the legislative standpoint. Yes. But when people say that to me, they're basically saying to me, they're trying to cheat out my money. Yeah. You want me to pay the claim, right? If your son or your daughter has an accident, but you don't want to pay me more than premium. How do I get paid? Commission of your premium. So you telling me to my face that you're trying to cheat me out of some money, right? That doesn't go very well with us. So we are pretty diligent, making sure we get a driver's policy.
And I'm guilty of that because now I understand why the person on the other end of the phone got aggressive.
So now let me ask you this. So how would you feel if one of those kids that you didn't want to put on your insurance wrecked your vehicle, caused over $50,000-$60,000 worth of damage, and your insurance denies your claim because you should have been paying premiums for that child in your household? You'll be airing them out. I ain't going to them. This happened,
and my kid might belong to you.
Who would I say the average? Fellow, like the average to add a kid nowadays anywhere from $900 to $1,500, right? As opposed to that kid going out there and getting into a wreck and causing 20, 30, 40, 50, or potentially kids getting in wrecks too, where it causes people's lives.
Mm-hmm.
So that $900 to $1,500 that you was gonna pay for that kid to be insured, I'd advise you do it. I'd advise you do it.
But I mean, I will ask this: is there a cheaper way where I can save and you can get paid?
Yes,
No
yes.
cheaper way.
No.
If they over 18, maybe.
Not that either. Good grades.
Okay, well, I should get free insurance.
Well, it depends on the
Good
carriers. A couple carriers got a great discount for young drivers, not everybody. So a few companies do offer that. But then you can do a usage-based insurance. UBI. Download the app, like Snapshot to your vehicle, and then save some money.
So you got Snapchat, you got
drive.
and a B plus for either high school or college. So if they're averaging that B plus, B or above, yeah, you get a discount there.
Yeah, but my kids, I get brown stuff on the tip of my shoe. If you don't get the grade you're supposed to get.
So there you go.
I'm with you on that one.
Yeah, they get brown.
So it ain't gonna be the cheapest, but you save a couple bucks. You definitely save a couple bucks.
And think about the risks they are getting on the road. Newly licensed, and then like Darren said, in today's time, they on the phone, they Snapchat. Only been driving a week. It's more of a risk, so it's more likely that an insurance company will have to kick out money from that teenager wrecking than an average adult who has driving experience.
Gotcha. Now, there's one question that I wanted to ask. We was talking about, we brought up the shop and how important it is, license for a shop. Now, how would shop insurance correspond with LLC? Because an LLC is supposed to also protect, how would those two, would they correspond?
Business insurance?
Yes, sir.
With the LLC?
Yes,
You said shop?
Yeah, how would they correspond, or would they just be, would one pick up where the other left off, or would one just, with the LLC override the insurance?
LLC would not override the insurance. So when we do insurance, we do it based on how your business is structured.
Right.
So corporation, LLC, sole proprietor, that's going to be the name of the policy. And so we're going to protect the entity under our policy in the event that you have a liability claim. So you being a member of the LLC, you're automatically protected as well as the LLC itself. When insurance runs out, or if insurance didn't pay a claim, then the LLC would have some liability financially to pay whatever the damages are. But we just want to make sure we structure the insurance the correct way.
Gotcha.
So we ask a lot of people in the beginning, is your business an LLC or corporation? They say yes. And that was the question. Which one is it? An LLC or a corporation, right? Because it matters. But people just don't, we have to drag it out people sometimes. But make sure we have it set up right. Yeah.
And it's important to make sure that you identify which.
Yes, which one it is.
Gotcha. Now I want to get off into life insurance. Which is better? Term or permanent?
Let me go first.
It's kind of a tough situation because, or a tough question because everybody's situation is different.
Right.
There's situations to where permanent is better. There's situations to where term is better. There's also certain situations to where you want to actually have a little bit of both. But to go over what they are, term is exactly what it is. It's for a term amount. It's a period of time. All right. Permanent, it allows you to build up. It's permanent, so it's going to be for your lifetime, and you can also build up a cash value within that policy. All right. With term, that's not necessarily the focus of term, but there's benefits to, like I said, both. Let's say you, I'll say it recently happened to me, discovering elders within my family that did not have a policy. Now, can I go out and get them a permanent whole life policy at this period of time? No, it's going to cost me through the roof. And they wouldn't even be eligible due to age in some considerations. I mean, in some factors. So I would have to go with a term style of policy.
Right.
In order to get them something to where if something does happen to them, they pass or can get sick or elderly, or get sick or something like that, then they're covered. So it's a tool. It's a tool. Sometimes you break out the hammer, sometimes you break out the nail gun. Well, sometimes you need term, sometimes you need stop.
Yeah. So I wouldn't phrase either one as better. One may be more appropriate for your specific need, what you're looking to achieve. So if you don't have a lot of money, you need some life insurance. Term is probably going to be the way to go. Right, your pockets are light, but your coverage need is great. Term is going to be the product. Permanent insurance is more long-term thinking, right? So you want to make sure you have coverage for life. You don't want to deal with this situation again. You don't have to, right? Buy insurance. Permanent is going to be the product you want to pick. When you look at the price difference between the two, term is a lot cheaper. And it's a lot cheaper because the question is if you die during the 10-year time period, you'll pay claims, right? Yeah. With permanent insurance, there's no if. You're going to die.
Right.
This is a permanent situation, right?
Right.
It's a permanent product. So we are going to pay a claim when it comes to permanent insurance. So it's always priced more than term insurance. But it depends on what your goal is, right? If you're looking at longevity, if you're looking at leaving a legacy for a family member, permanent is going to be the way to go when you're thinking long term.
Gotcha. And I guess I get it in the definition of what you guys explaining it. Term would be more appropriate, like you were saying, for elders. And permanent.
No.
So term.
So as you get older, once you start hitting like age 50, you can no longer get a 30-year term. Like that's not available.
Right.
At 60, you can't get a 20-year term. Like some of the products start becoming unavailable the older you are. The only option as you get older would be like a whole life policy. But the cost would be super expensive. So like if you were 65 years old, you want a $100,000 whole life policy, the premium might be $300 a month, right? Just absolutely unaffordable. The 30-year-old person who buys a $100,000 whole life policy may be paying $75 a month, much more affordable, but they done locked in that rate for the rest of their life. So the earlier you can buy permanent insurance, the better. It's going to last you your entire life, and you just kind of solve that problem. Term is more for younger folks. You have a need for a block of time. So your kids are still in the house. You're worried about the next 10, 20 years. In case something happens, term will be good. You're worried about covering a 30-year mortgage, term will be good. So depending on your situation, term could be a better option because you're just looking at coverage for a short period of time. But most people, like Nate said, need both coverages. So if you're married, you got kids, you may want a term policy for the next 30 years, but you're also planning. You're like, I'm young right now, specify some permanent insurance so that I have it for life and I can lock in this rate. You buy a permanent policy also, which is going to ride you the rest of your life, but the term is going to protect you for the next 10, 20, 30 years to the kids are out the house. Maybe the mortgage is paid off, and your need for such a high amount of life insurance may be going down.
Gotcha. That being said,
Some life insurance.
with that being said, what age do you feel a person needs to get insurance?
ASAP,
ASAP.
right after birth. Those kids come down with issues, disease, right? Sickness. Everyone does. So you could be a young person, you end up being uninsurable because you've been diagnosed with something at the age of 2, 3, 4, 5. So we encourage people to buy insurance on their children early. It's not a somber type thing, you know. We're not wishing anything. It's just a fact of life. You can protect them for the rest of their life. Get them some insurance now. If you do the permanent product, they're going to build cash value in that product over time, and they can tap into it. They can borrow from it if they want to. When they get to college, they can get some money out of it to pay for books or to pay for tuition. When it's time for them to buy a house, they take some money out of the life policy, use it as a down payment. So there are benefits to buying insurance on a child. It's not necessarily just thinking about death. It's about protection, and it's about planning. It is an investment. It is a tool you can use to help build wealth. But can't get that from a Hinder number. That's me in the office only.
Now, I will say when I think most people's perception of insurance is, as society, we look at it today, everything is right now. So like a lot of times, I'm guilty of it myself. When reality happens or risk happen, we're expecting tomorrow that my problem be taken care of or be in the process. What is reality of the speed versus what the insurance company can do in our fast?
So a couple of things, right? So I alluded to we sell for Ethos, a little bit for life insurance. Ethos brings speed to our transaction. So if you are a young person and you want to get life insurance and you want that policy to be issued in the next 1 to 2 days, Ethos can do it. It's like an instant issue policy. Others who are willing to wait and go through underwriting, we go the traditional route. So it depends on the personality as far as the speed of a policy being issued, how fast underwriting takes place. So there are different companies that fit different voids, and we try to, be involved in both of them. And a lot of it comes down to technology. So, we're in both realms when it comes to that. As far as service, people want everything right now. They have an accident, they want to talk to somebody right now. They have an accident, they want a rental car right now. We're here to answer questions. People got my mobile, send my email. So people reach out to me in the evenings, on the weekend. So I make myself available. Sometimes you got to train people. Sometimes they go too far. Like it's just like you got to respect that your agent has a family also, and it's off hours. But I mean, people call me on the weekend. They're at the dealership, they're buying a car, they can't leave without insurance. I'll take care of that from my mobile, my laptop, get it processed for them. People have an accident, they'll call me in a panic in the evenings on the weekend. That's fine. I walk them through that stage, how the claims want to proceed. It's all about preparing them, right, for the claim situation, what that looks like. Because typically you have a little bit of a waiting period before you get into a rental car, and people want it right now. Well, nobody's going to answer or see your claim right now when we submit it to the insurance company. So you're not going to get a rental car right now. So it's about managing their expectations. And I think we do it well when people call, telling them or explaining how the claims process will work out. Sometimes when you have an auto accident, depending on the situation, you may have 2 or 3 adjusters calling. One is dealing with injuries you caused to the other person. The other adjuster is calling to talk to you about the damages to your vehicle. Third adjuster is calling to talk to you about your own injury. So you get 3 different people from the same insurance company calling the same policyholder. Policyholder thinks it's redundant, but it's not. They all have a specialized area that they work in, and us preparing them saying, hey, you may get a phone call for 2 or 3 adjusters. Answer the call, answer the questions, because they all specialize in a different area of the policy. So anticipating what their questions are going to be is a big part of what we do. Right.
That's very informative because I get irritated because I'm like, man, I just answered this question. And now I get a better visual of why they're doing it versus, when it comes to business, I can be aggravated, to be quite frank.
A lot of people can. They just don't know. One person, all they deal with is injuries. They have nothing to do with fixing your car, right? And then the person who only deals with fixing your car doesn't have nothing to do with injuries. And everybody's trying to do their job. And when policyholders don't understand that, it creates tension and, they become upset.
Frustrated, yeah.
And it's like, no, explain it to you.
Right.
Yeah.
It's great.
Can't get that from agent number either.
I be calling them all the time. How much is your insurance?
So what kind of businesses would you insure?
We do everything. Barbershops, beauty salons, we do car dealers, we do auto repair, we do contractors, we do group homes, transitional housing, social services, human services, IT.
Salons and barbershops.
You name it, we do it. So what we don't insure might be that might be a hard question,
Right.
because it's such a big insurance companies have such a big appetite. They do different things. There's different departments that we would interact with the larger businesses, but we pretty much do any type of business.
I know he alluded to it earlier about, we were talking about driver license and the Department of Motor Vehicles hired me and fixed. Now, how long do you guys hold the driver account? Like, you know what I'm saying? Like,
Once again, it depends on the carrier. All right. Typically, what I'm seeing though, when I look up different people's driver's license reports or their MVR reports, I'm seeing anywhere between 3 to 5 years. Right. And so some companies, they'll go back just that solid 3 years, and anything that you did previous to that, we wouldn't see it all. Some companies will take it all the way back 5 years. And that's about the max I've seen from certain carriers.
So from a surcharge standpoint, points, all the insurance companies, North Carolina, they look back 3 years, 36 months. From an underwriting standpoint, insurance companies will look back 3 years, 5 years, maybe 7 years. That's their appetite for business. So you could have had a DWI 4 years ago. Nobody would charge you any points for it. But one insurance company may say, you've had a DWI within a certain time frame that we don't like. If they look back 5 years, and you may be ineligible to get comp and collision from that carrier. So it's like a decline. But it's, in terms of points, charging you more for it. Everyone uses 3 years. Come July 1, the more aggressive violations, we are going to look back and we're going to surcharge longer. We're also going to surcharge longer July 1 for inexperienced operators. It's going to be 5 years instead of 3 years. So we're going back.
I'm sorry.
But
No, I was going to say another thing a lot of policyholders don't understand as well. An insurance company is never going to increase your premium in the middle of your term. So, for example, let's say you renew your auto in August, right? And you got in an accident in October. And technically, you can expect your insurance to go up. Well, you won't see that until your next renewal. So when it's time for it to come off, when August hits, let's say this happened back in 24, so August of 2027, you're like, oh, that accident supposed to come off. I'm sorry, did I say that wrong there?
your years.
But yeah, my years are off. But basically, you have to ride out the entire 3 years, and then your next premium, you'll see your a decrease in price.
So there's a lag with surcharges coming on. They always come on at renewal time, and they don't necessarily fall out right at that 3 year period. If falls off at the end of your 3-year term, if you're with that same insurance company the entire time. You're still only charging for 3 years, but there's just a lag when it comes on, then a lag when it falls off if you remain with the same carrier. Gotcha.
See, that's why I'm learning from the best. He know where to come in, bro.
Words matter.
Words matter. I'm getting there. One day.
So, and how would that affect, like, say for example, we're breaking down what causes auto increases, and we're breaking down like the factors that go into it. What would be some of the factors that we can see in home insurance company? Like, I've seen my home insurance affect my mortgage because I escrow. So, and from the time that I purchased to the present time, with the, of course, with the taxes going up and with the insurance going up and the value of my home going up, I'm looking at almost a $200 increase in my mortgage from 2020 to 2025. What are some of the factors that make insurance go?
Watching TV, right? So all these natural disasters we see on TV, California wildfires, you see tornadoes in the Midwest, you see
Floods.
tornadoes in Texas, right? Windstorms. All the insurance, remember the whole reinsurance factor.
Right.
All the insurance companies, they don't operate in silos. So they're not just here in North Carolina, they're in other states. And that $1,000 you put in versus you getting hundreds of thousands of dollars in return when your house is destroyed,
Right.
it's going to bleed over into other states. So it's not necessarily that North Carolina has experienced the worst weather. We have experienced quite a bit in terms of wind, and people are turning in root claims over and over and over and over again, and it is, causing some rising premiums. But weather period throughout the U.S. is having an adverse effect on property insurance rates in all states.
Yes. So it's back to what we spoke about earlier. How it's like when you buy into insurance, everybody's responsible for each other. Okay, that makes sense.
Your brothers in California, your sisters in Florida, right? They're all tapping into the same pool of money at the end of the day, and they're experiencing claims. And luckily for you, you're probably not experiencing a claim, and that's a good thing. Like, I would never want to experience a house fire, total devastation, trying to rebuild, trying to come up with inventory, being displaced, right? Losing items you can never replace. I don't ever want to experience that, And I feel bad for people who suffered through that, through the wildfires, all right? I couldn't imagine.
Right. And even scarier when we just witnessed with Helen. You wake up and you float down the river.
You look at that, and you can't rebuild that fast either.
Right.
I mean, you may get money from the insurance company or from wherever, but how fast is the contractor going to get you on their schedule and get around to rebuilding your house or repairing your house? When they had those floods in Lumberton a couple of years ago, there were people 4 years later still waiting to get their homes repaired. That's how much of a backlog there was in terms of contractors getting out there to cut out drywall, to redo work for those homes that were flooded there. It's the same thing in California. It was like 16,000 structures destroyed. They're not going to be rebuilt in a year, or 2 years, or 3 years. I mean, all the developments we see coming up, how long does it take them to put up a track of homes, right?
Right.
It's going to be a while.
And from what I got, they still rebuilding in New Orleans.
Still rebuilding in
And
New
with
Orleans.
all trade wars there. Right. So it's crazy. But we being a society today that wants it now. This is the back flag. I guess a lot of flag that you guys receive. Like, you get frustrated customers wanting now.
We push back because people don't have money for their own deductible. You call in, you had an auto accident, and I tell you your collision deductible is $500. You gotta add to me. Is it my fault you ain't got $500? Right? Is it my fault you don't have a credit card to rent a car tonight until the insurance company gets to you, tomorrow morning? We get pushback from people over things like that. And it's like, I don't manage your finances. I'm just trying to tell you how this claim is going to play out. But people get wrong.
And not even just that, we are the agency, not the insurance company.
Right.
So even when it comes to price increases, I'm calling, I want to know why my insurance increased. We got to research, but we're not the ones that increase.
I want to know why mine went up too. You got a rate increase, I got a rate increase.
That's what happens a lot of times. I think that we don't. I have insurance on that car up there. I have, you know, like, and we don't get discounts.
We don't. Thank you. We
Y'all
don't
get
get
discounts?
discounts.
There's no discount that comes from.
Come on, man. Y'all get
The
come on.
surcharge,
You
we get
supposed
canceled just like regular folks.
you supposed to say you don't get discounts.
So you got your own
No,
insurance?
it's honest to God.
No discount.
Yeah, there's no discount.
So this is just
I'm my own agent,
across the board.
I get rate
Yeah,
increases,
yeah.
surcharge.
If I get into a wreck, my car insurance is gonna go up, just like everybody else. If I get a speeding ticket, it's gonna go up, just like everybody else.
If I have too many claims, they're gonna cancel me like they would cancel you.
So see, but the difference, it's a good thing you know it instead of me. I get behind the computer to make sure mine never go up.
See,
But,
scammers get scammed.
This is justice.
yeah.
Remember what I said? We're gonna find out. Guess what? I give up my driver's license to that cop. Guess what?
Yeah.
They're gonna find out. Insurance company about to find out.
That's it.
It's crazy. It's crazy to know that y'all, because I thought y'all got cheaper rates. That's why y'all smiling when y'all handing them quotes out.
Nah, we ain't those type of agents. That's travel agents.
And they still scratch our head like me. I need my windshield fixed, but it's like I'm gonna have to pay for this out of pocket.
Now, this question that I'm asking, it don't really affect our community because we're not suicidal people. But I would like to ask, like, is there, in the case of suicide, how does an insurance policy deviate, you know what I'm saying, dealing with?
So on the life insurance side, all insurance companies cover suicide. They all do. Now, there is a waiting period for suicide to be covered. So in 47 of the 50 states, the waiting period for suicide to be covered for a new application for life insurance is 2 years. After 2 years, if you kill yourself, it'll be covered in 47 of the 50 states. The 3 states, you got Colorado, North Dakota, and Missouri. Show the state. It's a 1 year waiting period for suicide. But it's covered under all the policy. You know, either a 2 year waiting period or a 1 year waiting period, but it is covered. We get that question a lot. And then we get a question about, you know, committing a crime. If my son or my daughter is committing a crime and they're killed, you know, the state statute kind of comes into play as to how that claim may be handled. And the people who have murdered someone, there's a slayer rule that will bar somebody who murdered a person from benefiting from the insurance policy would go to the next beneficiary. But there are some state statutes and some rules in place. But suicide is covered. If you kill the person, you're a beneficiary. You're not going to collect. You're not going to collect.
Right. So that will go to the person
That's
behind.
beneficiary. Yep.
Gotcha. Yeah, that's crazy because I would think that me personally, I thought suicide would negate for policy because, you know, like you have people commit suicide, but it's simple fact they can't afford their family and they feel like taking themselves. It's not common. Yeah, it's not common amongst our community, but you know,
I think that's where the waiting period comes in. So they probably feel, you know, you're not going to wait 2 years to kill yourself. If
Right.
you're in that situation, you're distraught and everything, you're going to do it right away. And they have that 2 year protection. 1 year, you're in one of those 3 states. But yeah, it does make sense to question. But if you can get past that 2 year time period and you kill yourself again, it would be covered.
and it's great.
Please don't kill yourself.
Talking about waiting periods, that applies to other types of insurance as well.
Right.
Kind of like flood insurance.
Mm-hmm.
All right, so if you try to buy a flood insurance policy today, all right, that thing may not necessarily become effective until 30 days later.
Right.
All right, so it gives the insurance company a blanket, so to speak, to say that this person isn't buying this type of coverage out of need for it right now. So if you hear about a hurricane coming and it's 2 days away from the shore, well, you can't buy insurance at that period of time. You would have needed it previously.
Yeah, they shut it down. It's called an adverse selection. So as if a person didn't have it and that storm's approaching, you just ain't gonna have it for the storm. You got to wait till the storm passes and you can buy some coverage later. But we get phone calls like that all the time when the storms approach. People want to add comp to their car because we cover flood under comprehensive on the vehicle policy. People want to add coverage to the structure they didn't have insurance on. Good adverse selection.
It's correct. Now, this is kind of a gray area question. Say it's a natural disaster, but it was one that was spontaneous, like these microbursts that we do. That would also be my coverage if a microburst would have damaged my home.
Microverse is just when we
Right.
cover.
You covered, so it wouldn't be like
That's a one
natural
claim, right?
disaster.
Yeah, that's a one claim.
When
Right.
tornado just went.
So natural disaster.
Hurricane just went.
If,
So now flood, right? That was a
Right.
natural disaster. The flood, again, if you don't have flood insurance, even though it is a natural disaster, that covered. You definitely need.
but
flood
that
coverage.
wind damage, I would be covered.
So for mud flow, mudslide, you need that flood policy.
Right.
Pick up that.
Right. So
Yeah.
If your house flood, you better hope that the roof get blown away and rain come inside.
The cause of flooding.
And you
I
don't-
feel if they're taking the roof off.
and I'll be out there.
I see, like Hurricane Katrina, right?
Right.
A lot of these claims, even in Florida, that thing happened. It's called concurrent causation, where you get two perils causing damage to a structure, and you don't know which one caused it. So you got a hole in the roof, you got flood, water coming in from downstairs.
Mhm.
Which one caused the water damage? Is it the hole in the roof, or is it flood, right, coming in the lower level? Those things kind of conflict in the policy language. And so you can have a situation where coverage is going to be questionable.
So you got the flood, but the flood can be assessed as it came with the basement versus the roof.
Depending on how much money, how much water you had coming there, it's going to be obvious. Maybe it came to the roof versus downstairs, but those are a lot of claims that are not concurrent causation.
I didn't know it was so technical. It's very technical. Money's
Well,
involved.
if you're two adjusters, which one you want to pay the claim? You point to him because he's the roof. You point to him because he has the flood coverage, right?
Right.
Neither one of y'all want to open up the checkbook, trying to
Right.
figure out who's going to pay what. Yeah.
Yeah. That's what crime comes into effect. Somebody go Somebody go. But and there's another question that I would like to ask too, like when it comes to protecting the home. Say someone's in your house and an intruder comes into your house. And this is gun laws, but it's also you protecting your home. If somebody comes in and they're injured, let's say you fire a weapon, and you fire their weapon, they run out of your house. Are you liable? Could they sue me from, you know what I'm saying, from an
Anybody can
insurance
sue.
standpoint?
Anybody can sue. Period.
I mean,
And you gotta defend it, right?
Right.
So anybody can sue you. Period. How a policy will play out, it depends. So I can't give you a good answer on that. There is a policy you can buy through
NRA.
NRA.
Yeah, there's a policy. NRA and USCCA, United States Concealed Carrier Association, and pretty much what it is if you fired that gun and something happened to the other person on the receiving end of that, all right, there will be coverages in place to help you assist with a lawyer, to help you assist with your home at that period of time if something got damaged. But those are outside of your traditional homeowner's policy.
And the other thing is words. Yeah, and I know I've said it 1,000 times, words matter. But if you watch TV, if you watch some court shows and stuff like that, words matter. Your intent, right? I intended to knock them down. I didn't intend to paralyze, right? Intent plays a big part when it comes to having protection under an insurance policy. So people need to choose their words carefully, and they need to make sure they are calling things with the right intent, in order to have as much coverage afforded to them as possible under the policy. We don't cover intentional acts. So if you intentionally try to paralyze me, that's not going to be covered, right?
Right.
But if you intend to hit me in the face and I become paralyzed because I fell down the steps, that's kind of a different story, right? Kind of the same action, but your intent does make a difference sometimes when it comes to having a good defense and having coverage. Right. So people choose their words very carefully. You see one TV.
Right.
For a reason.
And that's the reason why you hire an attorney and be quiet.
Mm-hmm.
That's something that I think a lot of people don't take note of. We like to tell our story before it's time.
You want to tell all their business to the
Right.
world.
And that's all insurance. Again, your roof. An adjuster comes out, look at the roof, and it's damaged due to a hurricane. And just in the midst of conversation, you start saying, well, it's been leaking for 3 years, and when the hurricane came, now you just told them. That's you just shut yourself up. That's neglect. So your home was already leaking prior to this storm, but now you want us to cover it because there was a storm.
Loose lips sink ships.
And I keep mine tight. It's almost like I'm sucking on lemons. Well, if there's not any more questions, man, I want to thank you guys for the because now I really feel like I'm sitting in class. You think that you know what your policy is, but I learned today that I still got some research because like there's certain factors like our business model. We developed insurance for our business. We took in, there's a lot of things that we took out, and we took it out because it didn't pertain to a partnership. And now it makes me want to reevaluate because I may need some of those things in because as people, you really can't say what will and what won't happen.
People are opportunists, right? And so they see a way in, they may try to exploit it.
Right.
Someone gets hurt, they lawyer up, they go and tell their loved one, all of a sudden, they flip the script on you. Right. You just want to make sure you're protected.
Keyword that reminds me of this home security. You want to be protected.
It's something different every day, right? It's literally, there's things, they're even doing it for 24 years, and there's still things. Even me as a new employee, I've done things that he's never witnessed in 24 years.
It's always something new.
There's always something.
Every day is something new.
It's kind of like that because
Yeah, you're a counselor over there,
right.
right?
I hear listen,
Therapist.
when I tell you I hear the whole spectrum.
You better think about that personal injury just in case.
Right. Yeah, see that, and we crack jokes a lot. So I gotta
tone it down, huh?
Right, I gotta tone it down because that gave me a different perspective because like some people, to you it's a joke, and to them they're laughing at that number. But who knows, like especially if they go.
And some people just waiting on a moment. Let's just be real. The world we live in, everybody's trying to look for $1. So someone who knows the system and may have more knowledge in insurance than you do may use that as an opportunity. Like, oh, there's people who literally go from job to job, waiting on an opportunity.
I've met some of
So
them
yeah,
because I he used to be my client.
don't say his name.
No, I'm not. I
Come
gotta
at
push
me.
myself away from it because I'm listening at if you scheming and scamming, and I'm saying that you wanted to book appointments. I was always busy, but he was one of those people who go in the grocery store, lay down because it's full of water. Man, I failed. Because he had done things similar
My
in
neck,
the
my back,
workplace. Yeah,
my
right.
back and my back.
Right. It's always the places that you
Mhm.
can't. Like somebody tell me they injured their stomach or their back, and well, man, you better go home. Go home and take the Epsom bath. Get that soreness out.
Some tussin
Right. That's it. Right? Put some of that Robitussin. Because it's good to know insurance because you can also, I feel like now I can deflect some things that people try to bring to me. Because I'm like, with the knowledge of knowing how insurance works and what it covers, what it entails, that's something that most people, they just get it because it's legal. Like opening up when we talk. Most people get it because you have to have it and don't know what they have. Right. I can say I was Ray Charles and Stevie Wonder before.
You was blind,
Right.
now you see.
Nah, I see.
So,
Last comment.
No, I'm good. talk to an agent.
704-896-9393.
Talk to the agent tomorrow, make sure everything good.
Yeah, and seriously, that makes you want to reevaluate and educate yourself on what you're getting involved with. And I say particularly our community is bad about doing things that, just doing it and not getting the knowledge of what you know.
Especially on the financial side,
Right.
life insurance, we are really bad as
Right.
far as handling business on that side.
Right, and most people just get it to cover their funeral costs.
Build a legacy,
Right.
right?
When they-
Leave wealth when you pass away. Leave wealth behind.
I think that's, when you look at it, we don't think that when you're born and you die, what you're leaving behind. But everyone else thinks, they know, especially a man of his household, you don't want to leave your family, your wife, your kids in a financial strain when you can leave them with something that can sustain them. And we got to erase that. I hear guys say it all the time, man, I ain't leaving my money to be with the next guy, and vice versa.
Listen, you want her to marry for love or for money?
Right.
When you pass away.
Right.
I'd rather be for love.
Right.
That she's financially secure, that your kids are financially secure, that they haven't had a decrease in lifestyle. I'd much rather be that.
Right, me as well. That's where I come from. Like, my whole concept is, when I leave, my wife and kids should be better. They should be able to sustain or be better after I'm gone.
Absolutely.
And that, I think as men in general, now that I know about insurance, I think I'm about to put some more zeros.
Okay.
But because what I'm saying by that is, I'm seeing not the grievance of having to pay it, but the benefits of having it.
Mm-hmm.
Next one, teach one.
Right.
That's
Right.
it.
So I want to thank each and every one of you today. And if you get a call from me and I'm asking you questions, don't hang up. Don't hang up.
I'm gonna put you on speakerphone.
Don't put me on
speakerphone so I can do some other stuff while you talking or whatever.
And we answering the questions though, we better be writing that policy. Don't call and ask us, and
Trust me.
then
You're going to start seeing me bring some things over.
I'm just
Listen, and listen, we're not pressure based. We're education based.
Right.
Take the information, let it marinate, come back and see us when you're ready.
Right.
We're not a fit for everybody. You get tickets, DWIs, and everything else. We might not be the market for you, but you great drivers with few claims or few violations, we definitely have a home for you.
That's right.
All you business owners, give us a call.
Yes, sir.
What's the number, Nate?
704-896-9393.
There we go.
That's what we got.
The Rankin Insurance Group.
Give
Be
us
a
a
part of the
call.
group.
Definitely give us a call.
Yes, sir. Appreciate it.
When it comes to protecting your family, your business, your vehicles, and your home, finding the right insurance agent is important. Price is a factor, but coverage matters. We're here for your auto, home, business, and life insurance needs. The Rankin Insurance Group. Be a part of the group.
Your local barbershop is a place to go for a nice haircut, shape up, or just a little off the top, traditionally speaking. Rice and Ruck, master barbers at Klippah Talk, have combined their interest in hair design, community events, and social awareness to bring you more than just a traditional barbershop experience. Come enjoy a welcoming family atmosphere where no one is a stranger. A place to collectively discuss issues that affect our lives and that affect our community. And a place you can get a really nice cut. But don't take our word for it. Come see for yourself. You'll find that we're more than just a barbershop. Come experience the difference at Klippah Talk.